Hello, everyone. My name is Jimmy Wei, and I am a student at Stanford Online High School.
And I'm Kai, and I go to Darien High School.
Today, we'll be pitching Cisco Systems, a Nasdaq-listed company. We recommend Cisco as a strong buy over an 18-month investment period, with a target price of $81.04 at a 33.2% upside. We believe this because our investment thesis is composed of five different parts. First, we believe it will have strong AI infrastructure growth. We also see its reliable legacy business being very positive. Then its strategic acquisitions can provide a lot of upside. It also has minimal geopolitical exposure and it has a very strong financial standing. We also see two catalysts that will accelerate the stock price in the near future. For one, you have the AI integrated products and services, and then you have its recent $28 billion Splunk acquisition.
So, Cisco Systems, established in 1984 and based in San Jose, California, is known as the backbone of the internet. During the dot-com boom, it even became the world's most valuable company. Notably, Cisco has pursued an aggressive acquisition strategy, investing over $70 billion to acquire more than 220 companies. Today, Cisco operates across five core segments. Networking, its largest at 54% of revenue, provides essential infrastructure. Security at 9% of revenue delivers AI-driven threat protection. Collaboration at 8 features the WebEx suite. Observability at 2% focuses on IT monitoring, and services at 24% offers technical support and consulting. Crucially, Cisco is transitioning from transactional hardware sales to subscription-based models, providing more consistent revenue. This shift has seen subscriptions grow from 25% of revenue in 2015 to 51% of revenue in 2025, demonstrating Cisco's adaptability and focus on long-term stability.
Looking at Cisco's industry, it operates in the multi-trillion dollar IT industry. However, this is a broad industry and Cisco doesn't operate in every segment of it. So we have identified its five core segments. First, you have networking, which will be heavily driven by a demand for digital connectivity, cloud computing, and AI infrastructure. Then you have security, which we'll be seeing rising, we'll have increasing demand due to an increase in cyber threats and tech vulnerabilities. And a recent Cisco survey even found that 97% of organizations plan to increase cybersecurity spending within 2 years. Collaboration has been seeing steady demand, largely due to COVID, which heavily accelerated a shift to remote slash hybrid work. And then observability um, has also been seeing increased demand due to a strong due to many finance and banking companies looking to gain access to real-time monitoring and AI-driven analytics. Many of this is also due to regulation that requires such capabilities. Finally, we have services which Cisco provides through advisory or third-party outsourcing. Cisco services are also linked to its product ecosystem, as Cisco often offers services for its products or other softwares.
So, Cisco's competitive strength stems from four key areas: premium brand recognition, a full stack ecosystem driving retention, strategic R&D and acquisitions in emerging tech like AI, and a global reach with deep Fortune 500 and government relationships. A Porter's Five Forces analysis highlights high barriers to entry and a low threat of substitutes, reinforced by high switching costs and mission critical services. Combined with strong financials, strategic acquisitions, and a decade of R&D, Cisco maintains a defensible market position, making it a very compelling investment.
Our investment thesis is composed of five main points. First, you have AI transformation, which has been experiencing double-digit to triple-digit growth for these AI-specific products, especially in infrastructure and cybersecurity. Its strong legacy business is acts as a major cash cow, providing funding for its future developments in AI or other softwares and services. It is also a market leader in the $70 billion enterprise networking industry. We also believe in its strategic acquisitions, as proven through its recent acquisition of Splunk, which we believe to be extremely successful. Then you have its minimal geopolitical exposure. early strategic moves from Cisco have made it so that they have a very diverse supply chain that reduces a lot, that reduces reliance on nations such as China. And then it also has a very strong financial standing through its robust cash flow, profitability, and low debt. And it is actually offering one of the highest dividend yields out of all companies in its industry. We also identified two primary catalysts. First, you have the strong demand for AI integrated products and services. Recently, they actually projected that they'd exceed their original $1 billion target for AI infrastructure by fiscal year 2025. And they're also seeing triple-digit growth in web scale orders. They've also partnered with some of the top firms in AI, such as Mistral AI and NVIDIA. Its recent $28 billion acquisition of Splunk has also been it has been incredibly successful as it's boosted revenue for security and observability in either triple digits or double digits. And most Cisco and Splunk customers also view the acquisition very favorably.
So, Cisco's financial strength is evident in its consistent dividend growth since 2015, now yielding a solid 2.69%. This, combined with their recently approved $15 billion share buyback program, demonstrates a clear commitment to returning value to shareholders and reflects strong financial health. Furthermore, Cisco exhibits robust profitability. The return on assets, equity, and invested capital are all positive, indicating efficient management. Notably, excluding a one-time tax adjustment in 2018, Cisco's return on invested capital has consistently exceeded 10%. This sustained performance underscores their ability to generate strong returns on their investments, reinforcing their solid financial foundation. In terms of valuation, we valued Cisco using comparable company and DCF analysis, showcasing a range of $73 to $90. Our combined average valuation was $81.04. We also use analyst estimates in a 52-week range to provide further context. And with a current price of $60.86, we see a 33% upside potential. And this chart visualizes our valuation and it highlights Cisco's potential. So our DCF model values Cisco at $81.70 per share, which is a 34% upside using an 8.8% WACC and a conservative 16.3 EV to EBITDA multiple, which is actually 28% lower than the industry median. For our comparable company analysis, we use companies like Dell, Juniper, and Microsoft, applying median EV to EBITDA and PE ratios. This yielded price targets of $73.44 for EV to EBITDA and $86.68 using PE, which we average in our football field chart shown in the last slide.
Like all investments, Cisco carries investment risks, which it has tried to mitigate. For one, you have its exposure to tariffs and governmental changes, which has been exacerbated due to recent government efficiency efforts and a potential trade war. However, it has tried to mitigate this by diversifying supply chains and manufacturing locations and has implemented flexible pricing. The AI growth that is largely fueling its run is also a risk as it may be slower than anticipated. However, Cisco has made sure it's at the forefront by establishing strategic partnerships and collaborations, and is also very involved with regulators to make sure they understand what's going on with AI in the future. And then, of course, this acquisition strategy can be very risky as they can overpay or overextend themselves. However, they have a large history of over 220 acquisitions over their entire company history, and they've been extremely successful, so we believe they'll continue doing so.
So Cisco's ESG efforts focus on governance and social impact, environmental sustainability, and digital inclusion. Their inclusive future strategy has led to 38% female leadership and 46% diverse leadership. They aim for net zero emissions by 2040, integrate circular economy principles, and work with suppliers on emission reductions. Their networking academy has trained 24 million learners, targeting 25 more by 2032. Through these initiatives and community programs, Cisco has positively impacted 1.1 billion people worldwide. To conclude, Cisco's strong market position, consistent financial performance, and significant growth potential, combined with our valuation, present a compelling investment opportunity. We believe Cisco is well positioned for future success.
And here's our appendix, which shows some of the work we did behind the scenes.